Hi folks, second video for Friday. I just thought of a few points that I wanted to raise after I recorded the last one. One of them being it's Friday. As I mentioned in the last video, the weekly close is always more important than the daily close. There's a lot more winding up positions, obviously, before the weekend. Now, and I obviously also, a general trader rule is don't run positions over the weekend because, of course, from Friday night to Sunday night, 48 hours gap. Anything could happen and you could be caught in a position which then gaps wildly open on Sunday. Even if you've got a stop loss order, that if some extreme news event occurs and the markets gap significantly away from where they closed, you could be caught on the wrong side of a trade. The market could open through your stop loss and therefore you could be facing significant losses. Which you obviously don't want. Almost open-ended, in fact. So on that note, I would have thought in traders' minds this weekend will be, we're waiting for we're waiting for news to develop on this new strain of COVID virus. We don't know how contagious it is yet. We don't know how the strength of it. We don't yet know how badly it affects people who are infected. So I personally would be concerned that there's some sort of news over the weekend, maybe the spread into a new area. I don't know. A new, say we wake up Sunday morning and there's news that the virus has been detected in a lot more countries or in a lot more numbers, or there's indications that the vaccines won't work. You know the story, or that it's a very severe strain. If that happens Sunday morning, by the time markets open Sunday night, if stock markets could open significantly lower. For example, the dollar yen could open significantly higher. So I would be thinking that not a lot of people would want to, not a lot of short-term traders. I'm not talking about investors here. I'm talking about short-term traders. Not a lot of them would want to end the day with a long position in the stock markets in case something like that were to occur over the weekend. So I'm wondering if there will be some downside pressure on the stock markets, which are already, of course, in a short-term bear trend anyway. I'm wondering if there may be some of that, especially into the end of the day as people square up their positions. Just a thought. Right, the other things I wanted to show you was some commodity markets. Gold, WTI has been a good little market lately. It's been some good trades. It's certainly moved a lot to the downside. Now, we've bounced to the first fib level, and I'm just attempting a small short position here because we are in a bear trend and because we have had a 500 pip bounce to the 23.6% fib, and even with price action, it's quite a good level. We've got this spike low down here matching that resistance level. Let's see if there's anything on the 1 hour chart, maybe some moving averages. There's no particular trend line I can draw on here, but yes, there is a 100 period moving, 100 hour moving average on that chart, which is also lending weight to that resistance level. You see the yellow line there. So yeah, all in all, I think that it should be quite a strong resistance level. We'll see. Maybe a high for the day, maybe a retest of the low down around $63. Gold worth a look at. I kind of lost track of gold during the week. It bounced way further than I had expected. So with that, I decided to leave it alone for a couple of days, but we can look at it again. As you can see on the hourly chart, pretty negative. We've got moving average crossovers, negative moving average crossovers. We have bounced to the 50-hour moving average. That's held perfectly. Let's have a look at the 4-hour chart to see what the moving averages are doing there. Also quite negative. So the price is trading below all of the moving averages, and we have again got moving average crossovers. So as you know, I've been feeling negative about gold for quite a long time, and it was just that very strong bounce that fooled me. I actually had a short position on, got stopped out, and then I thought, wait, I don't understand what's going on here. That shouldn't have happened. So when you don't know, best to leave it alone. Now, why can't I get my Fibonacci levels back? What have I done? That's what I'm trying to do, put my fib levels on there. I've taken my second fib level from the 38.2% fib that I got from the whole of that swing high move down to the swing low move. Now, 38.2% fib comes in at 1779. You will remember that 1782, 1779 was a really important level on the downside. That was a big support level here that held so many times. We were buying that and doing very well out of that trade. And then finally it broke lower. This was the spike that confused me. I thought that once we'd broken lower, we would head down. So this was the spike confused me. That's when I decided to leave gold alone. But anyway, in the end, we did go down towards my 1760 target. Now, therefore, on this bounce, I'm thinking that 1779, 1781 should be a strong resistance level. We didn't quite get there. Maybe we won't. We're in a bear trend. We'll probably trade lower. But just be aware that that should be a strong resistance level. I've got it on the report. I've got it in the cheat sheet. And if we continue up, then obviously we do have strong resistance around sort of 1785, 1780, 1785, 1790. But I don't think we're going to get anywhere near that, if I'm honest. Okay, just wanted to make those points. I don't think there's anything else I can really talk about. Yeah, I think that's it. Okay, have a great weekend. Good luck today. That's it. Thanks so much.